Assalamualaikum. Today, our group will present the topic primary sources in practice. How the Quran and Sunnah shape the rules of riba, ghara, and maisir in Islamic finance. Islamic finance is based on Sharia and its two main sources are first, the Quran. Give clear guidance on justice, fairness, honesty, and prohibits riba, gambling, and harmful economic behavior. The second one is the Sunnah, explain and support Quranic teaching. The Prophet ﷺ prohibits deception, uncertainty, and gambling. Right transaction forming the basis of Islamic financial rules today. Why are primary sources important in Islamic finance? They ensure that financial activities promote social justice, prevent exploitation, encourage transparency, avoid harm to individual and society. Modern Islamic finance is not just conventional banking without internet. It is a comprehensive system guided by ethical principles from the Quran and Sunnah. Islamic banking applies these sources through Sharia scholars, product design, and regulatory frameworks. Now, I will pass to the next presenter to explain the concept and prohibition of riba.
Thank you. Now I will explain about riba, one of the most strictly prohibited elements in Islamic finance. What is riba? Riba means any guaranteed increase on a loan or debt without real economic activity. In a simple terms, it is interest or a fixed profit charge to a borrower regardless of risk or effort. The second one is Quranic evidence. The prohibition of riba appears clear in the Quran, especially in Surah Al-Baqarah in verse 275 to 279.
الذين يأكلون الربا لا يقومون إلا كما يقوم الذي يتخبطه الشيطان من المس ذلك بأنهم قالوا إنما البيع مثل الربا وأحل الله البيع وحرم الربا فمن جاءه موعظة من ربه فانتهى فله ما سلف وأمره إلى الله ومن عاد فأولئك أصحاب النار هم فيها خالدون يمحق الله الربا ويربي الصدقات والله لا يحب كل كفار أثيم إن الذين آمنوا وعملوا الصالحات وأقاموا الصلاة وآتوا الزكاة لهم أجرهم عند ربهم ولا خوف عليهم ولا هم يحزنون يا أيها الذين آمنوا اتقوا الله وذروا ما بقي من الربا إن كنتم مؤمنين فإن لم تفعلوا فأذنوا بحرب من الله ورسوله وإن تبتم فلكم رؤوس أموالكم لا تظلمون ولا تظلمون,
which states that Allah has permitted and forbidden riba. This verse also warns of serious consequences for anyone who continues practicing riba after receiving proper guidance. The third one is, why is riba prohibited? Islam forbids riba because it exploits borrowers, gives unfair advantage to lenders, encourages wealth to grow without effort, widens inequality, and also can trap people in ongoing debt. Islamic finance promotes fairness by emphasizing risk sharing and profit from real transactions instead of interest-based lending. The last one is the type of riba, which is riba al-duyun. interest on loans or debt. The second one is riba al-buyuk, excesses or unjust gain in trading certain commodities without proper Sharia conditions.
In today's world, riba is the most commonly found in conventional financial system. The example of riba are interest on personal loans, interest on housing loans, credit card interest charge, interest on fixed deposit, and late payment interest penalties. So, all these involve guaranteed increase in money without underlying trade or asset activity. So, how Islamic banks avoid riba? Islamic banks design alternative contracts that follow Quran and Sunnah rules. Some common contracts include, firstly, murabaha. Murabaha is a cost plus sales. The banks buy an asset and sell it into customer at a known profit. Profit is transparent and not tied to the money lending. For example, Bank Islam's murabaha personal financing. Next is ijara. Ijara is leasing. Ijara used for car financing, equipment rental, and property. Customer pays only rental, not interest. Next is musyarakah and mudarabah. This is a partnership model. It is profit sharing instead of interest. Losses are shared based on capital and contribution. It's basically used in business and investment financing. So all these products shows how Quran and Sunnah shapes modern banking practice to the fairer financial systems.
So I will be explain the difference between Gharar and Maisir. So let's discuss. So Gharar is uncertainty. So what does it mean? So basically Gharar refers to any transaction that involves ambiguity, deception, or unknown outcome. Such an example includes buying something without knowing its condition, selling something that the seller does not possess, or contracts with unclear terms. So, prophetic evidence. The Prophet prohibited bay al-gharar, uncertain sales. Such an example from hadith includes forbidding selling fish still in the water, and second, forbidding selling in the unborn calf. So next, Maisir. Maisir is also known as gambling. Maisir is wealth gained purely by chance, luck, or speculation. So Quranic evidence, Surah Al-Maidah, alcohol, gambling, and games of chance are abominations and the word of shaitan. So Maisir includes gambling, betting, speculative trading similar to gambling. So if you're wondering why Gharar and Maisir is prohibited, so the first one is they create injustice. Second, they transfer wealth unfairly. And the third, they encourage quick profit without effort. And the last one is they cause social and financial harms. So in conclusion, in Islamic finance contract must be transparent, fair, and free from ambiguity. The next presenter will explain how modern Islamic banks avoid Gharar and Maisir.
Today, I will briefly explain how Gharar and Maisir appear in the modern financial system and how Islamic finance avoids them. Firstly, Gharar in conventional finance. Conventional insurance. You pay premiums without knowing what benefit you will receive. This uncertainty is Gharar. Islamic alternative takaful. Participants share risk together and contracts are transparent and cooperative. Secondly, Maisir in the modern product. Lottery link deposit. Saving are placed for a chance to win prize and return depend on luck. Islamic alternative profit sharing. Mudarabah. Money is invested in real Sharia compliant activity, and returns come from actual profit, not chance. In conclusion, Islamic finance avoid riba, Gharar, and Maisir by using ethical, transparent, and risk-sharing contracts. This ensures a fair and responsible in financial system.